when it comes to debt service coverage ratio specifically, they are loans that are based off the property's cash flow and not your personal income. So let's say that you have a property that's bringing in $1,000 a month in cash flow. As long as you're bringing in $1,000, or excuse me, if the debt on the property is $1,000 and you're cash flowing $1,100, so 100 over that amount, you'd have a 1.1 ratio. That ratio is what tells the lender that the property is able to cover its debt payments. And so having a 1.2 is typically pretty strong, but there are also lenders who go below one, and there's even no ratio DSCRs. Of course, those are going to be a little bit riskier and have higher rates typically.
So what is the range of rates as it sits today? Because mortgages, they always fluctuate, but just kind of give people an idea of what they would be looking at there to apply right now.
Yeah, mortgage rates are definitely always fluctuating. I would say right now you're typically looking at about, depending on your credit score now, because your credit score is a factor when it comes to a DSCR loan. You're typically going to be looking at about a point to a point and a half higher. If you have great credit, then you could be as low as 0.5% over what conventional rates are. But you also have the option to buy down the rate. And so what that means is if you're sitting at like a 6% and you want to pay to get that rate lowered, you could pay X amount, let's say $2,000 in this case, and that would lower your rate.
Gotcha. So I've used mortgage brokers in the past, and the one that I used was really good at making sure that I wasn't overpaying, right? So, for example, let's say use your example, we were at 6%. I can get down to 5.5 for maybe, let's say 2,000, but to get to 5.25, it was like 15,000, right? To get it to that rate. So he's like, it doesn't make sense to take that next 0.25% because it's not much. I don't want to say much savings, but the 15K doesn't justify the discount, basically.